Good morning, traders. Happy Wednesday. It's 8:01 a.m. Chicago time, 9:01 Eastern on January 11th, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we are, another day, and we are back in the seat in front of the market. The overnight session was fairly well traded. Overall, it looks like the market is mixed in its disposition towards risk. This morning, we have a mixed bag and a very, very consolidated market overnight, except for crude oil. The news driving crude oil has been that the U.S. oil output is expected to rise this year through next year. And in addition to that, some of the OPEC countries are not sticking by the agreement that was made last month. For example, Libya is producing more than its quota, and so is Iran. So oil's been under pressure, has been trending down for a couple of days now. Um, it's up since yesterday. It's up almost 1%, 50 cents, followed by the US dollar, which is up 37 basis points, with the euro, the Japanese yen at the bottom of the pack of futures that I watch. Then equity indices are in the middle, many of them unchanged. The S&P 500 is down just a tick from yesterday. Not much more news. Obama presented his farewell address yesterday, last night, and we're here in the U.S. We're in the middle of the transition in the markets, anticipating what is next. We're still near highs. Yesterday there was a swift rejection by the S&P 500 and the major indices. The Nasdaq keeps leading the way as far as strength. And all around, that's what we've got. One thing I thought was interesting was that the New York Stock Exchange announced that part of it is going electronic. Floor trading on New York Stock Exchange's NYSE MKT exchange. This is the part that lists 250 small cap names. Will be fully electronic soon. That's a shot across the bow for anybody that's working on the floor, any market makers working on the floor at New York Stock Exchange. It's inevitable that their jobs will be gone soon, and for that exchange to go fully electronic. Um, let's take a look at what we expected from yesterday versus what we got. Here's a view of yesterday's Trader Bite. As always, I'm reviewing what I said the day before versus what happened. I don't think there's a more transparent way to do this than to do that, to look at what was expected versus what happened, and make that part of the plan as to what to plan for today. Yesterday, the expectation was for the market to push lower at the open, so we're looking for an open auction on the open, looking for downwards pressure early on, finding buyers, and then rotating back up towards that 2271. If you recall, I said if we get to 2271, I'm expecting a measure of resistance early, and then the expectation is for it to push to the point of control to trade this upper distribution here. 2274 is what's next. I didn't draw it on here because I didn't expect them to do it in the same day because the range has been pretty tight. But what it did was it played out hypo 1 completely, and then it surprised us by pushing back through and down. The secondary hypothesis was an open auction again because we were opening in value and range. Push up, uh, push up towards the 2269 area, find resistance, and then pull back down to 6450 base, and then turn up to 71 later in the session. That did not happen. That's the opposite plan than what actually happened. And then hypo 3 is for the market to give up its attempt to push higher, to chop around the 64.50 again, and then to start rotating down towards 57 and a quarter. Here's what actually happened. This is not what actually happened. This is the overnight. Here's what actually happened. So we pushed down to 59.50, which was the overnight low yesterday. That was the exact overnight low price, 59.50. And then we rotated back up, pushed all the way through to the prior day's high, a small pullback, and then we blew right through that 71 all the way to 74, and we hit 74, the naked point of control, the upper distribution to the tick before we got this big rotation. This is a 3 standard deviation um, rotation, harmonic rotation down um, from the high, putting in at 63 and a quarter. Note this price, 63 and a quarter. We pull all the way back. If you take the midpoint of this move, it comes out to approximately 68.75. The market pushed by 2 ticks to the mid of the move. So an impulsive move. This is really an impulsive move. An impulsive move is expected to pull back to about midpoint and then get a continuation down. We expect at least a test and breach of 63 and a quarter, and the goal when you're trading a continuation of an impulsive move is to scale out before that last low. In this case, will be 63 and a quarter. And in this situation, it went to 63 and a quarter, and it went to 63 and a quarter right on the close. But it finished weak. This action right here, where we just moved up in waves and we rejected it fairly swiftly. The expectation is that we would continue lower overnight, and we did. So other than this move here, a fairly normal auction or orderly auction. Looking at carrying the story over to the overnight session, you can see here it stabilized overnight, retested the point of control from yesterday to the tick, and then it finally pushed down to 59.75, and we put in an overnight low, which is the same, practically the same as the prior overnight low. So if I squeeze this in here, this is the overnight profile. This is last night's overnight profile. You can see the low, the prior day is 59.75. The current day low is a double bottom at 59.75, a weak low at 59.50. This low is currently weak. And what's it against? It is against that 22.60 level that I talked about Tuesday a week ago as a key over underline, if you remember. If you go back to Tuesday's Trader Bite, I said that this is a key area. And if I zoom in even more, you'll see that 59.50 shows up right here. So it shows up there. This was the day when I said that 22.60 is likely to propose some significant resistance on the open at the beginning of the year. And then we carry that forward, and here we are tapping against it there, there, again and again. So this is a key line to watch for. Just a classic resistance line. Classic resistance line turned support in the short term, and that's what things are shaping up as. The other thing to observe about the overnight to fill the picture for context is the fact that we have 148,000 contracts. There's some pretty good participation here. The market is strengthening, is firming up right now, and is getting bullish, starting to turn up. And so overall, where does this leave us? It leaves us with a very clear seller participation. An OTF or a higher time frame or longer time frame seller stepped in yesterday. You can see the delta right here on that last bar, just people getting flushed out, weaker hands getting flushed out into the close. The market closed with a delta almost at even after pushing up all day, and overall, what this is saying is that we found our sellers up here, and I expect significant resistance up here on the next push up. So I am short term looking to the short side. I'm looking for a break of 59.50, and I'm looking for a move lower, lower to the next areas of interest, the key of which is 52.50 and 52 even. That's my short-term perspective. I want to remind you that we still have this, we're still stuck and trading at 64.50, which is the MC point of control for this area. So when I extend this out, when I extend this profile out, here we go. We move the profile forward. Keep your eye over here. Keep your eye on this and watch how the market is filling in where we're trading. So you can see where the volume is coming in, and the volume is stacking higher and higher at 64.50. It's becoming sharper and sharper. Now we traded up here. You can see the volume filling in up top, but it's not very much. You could see that the volume, the majority of the volume continues to be at the 64.50 area, now shifting to 65. 65 is now the point of control. So it's that's where we are. We're opening right in this area. I expect a very choppy open. And my primary hypothesis today is the expectation is we're opening in value, in range, in value against the point of control. Noisy area, expecting chop this morning. Looking at the calendar, we have this morning we have just crude oil at 9:30 Central, 10:30 Eastern, and we have Fed Speaker Dudley at 1:20 Eastern. So there's not much on the open that's likely to push us along. So the expectation, the primary expectation, is for wide swings as both motivated sellers and motivated buyers play their hand here on this triangle to see which way this is likely to break. So I expect the open to be fairly noisy. I'm looking for it to pop through and push higher, and I expect it to fail, move back through the point of control and make its way down to 2260. I'm expecting this area to be tested very, very soon. That's the primary hypothesis. Secondary hypothesis, same thing, opposite idea. Open up, push down, start to push down, and then find its buyers like we've been doing. You know, we push down and then we find our buyers. We push down and we find our buyers. We push down and we find our buyers. Expect the same thing. Look for it to come back, get retangled at 64.50, and then try again for that 71 again today. But I expect a fair amount of resistance as it starts to push lower again. Overall, the trend, the bigger time frame trend, is to the upside. So I'm not short biased in the long run. I'm just talking about today having more incentive, or think of it this way. Think of how water moves through land. Water generally finds the path of least resistance and takes that path no matter where that path goes. The hypotheses are based on that same principle. It's like physics, based on the same principle that it's the path given yesterday's action, given the drop on Monday, the drop yesterday, big drop yesterday. The path of least resistance into the close has been to the downside as opposed to the upside. Recently, in the last 3 or 4 weeks, it has been to the upside. We tend to push up into the close, and we're up against all-time highs here, and it seems to be weak. There's still a poor high from 2277, the all-time high in this product. So I'm aware of that. So you can see how there are two forces that are almost equal that are pushing each other, and that's why I expect choppiness, because I expect the higher time frame to have an incentive to continue to buy and look for new highs, and then I expect the short to intermediate time frame to look for sell opportunities given what we've had so far this week. Okay, so that's my time, 15 minutes. I hope you gained something from this, and I hope you're making your own plans and are starting to see the market in terms of a story that's unfolding, rather than here's a level and I'm going to trade this level. The market doesn't care about levels. It doesn't care that You have a line somewhere. What you're looking for is zones of resistance and zones of support, and there's a lot of wiggle, and that wiggle is called the harmonic rotation. Okay, and so just think in that way, so you're not captivated by and trying to trade a level with a two-tick stop and watching your account get dwindled down two ticks at a time. A very frustrating way to learn. Anyway, good luck, and I'll catch you tomorrow morning. Take care.